I'm Catherine Ross, and I'm here live from the floor of the NYSE with Jim Cramer. Jim, what's on the top of your mind this morning?
Resilience. We had the market basically down 500 Dow points. There were people who were selling furiously, believing that World War III, I think, is the theme. Then I think other people came in and said, you know what, this is the break I've needed. Maybe we're in a 24/7 market where what happened between 8 and 10 is every bit as consequential as what happened is between 9:30 and 4. It's a little mystifying. Without Boeing and Walgreens, both stocks in the Dow would be screaming.
Jim, let's take a look at the markets now. We're up. The Dow is up 30 points as of 10:01 a.m.
Without Walgreens and Boeing, which are getting killed. And you got the financials doing really, really well, the retailers doing well, the home builders doing well, tech out of CES doing well. I did a piece yesterday about how strong the tailwinds are out of CES. I've never seen anything like it, but when devices actually matter. So it's incredible, frankly. It's incredible. Now, under Trump, we've had 3 Januaries that were all strong for NASDAQ, so maybe this is just par for the course. And I'm going to talk about, there's a wide-ranging things I have to talk about. I've rewritten, even during when I was on Squawk on the Street, my conference call. I may have to just scrap everything other than a preamble about what we do and some talk about the president, because the president speaks at 11, so anything that I think that could happen at 9:30 might be taken away by 11. But the desire to be in stocks is the most fervid I've ever seen in my career.
Now, Jim is, of course, mentioning his Action Alerts Plus members only call, which is happening live at 11:30 over on actionalertsplus.com. But Jim, you said that the market's fervent right now.
Yes.
But in your opinion, is this market reaction appropriate?
Well, there are 2 markets. There's the market that's based on employment and interest rates in the Fed, and then there's the market that's based on terrorism, Mideast, and oil. And I have a piece in Real Money today that basically explains that if you don't have oil spike, then it kind of moots the point of the Mideast. Now, I wrote the piece with some trepidation because there has to be some level where oil goes higher. And Carly Garner, one of my favorite writers for Real Money, did a piece last night talking about the peak in gold, maybe peak in oil. And what I see happening is that when you have ADP being very strong, when you have Lennar having really good numbers, when you have Macy's having better than expected numbers, there's a tremendous amount of extrapolation, and that extrapolation is justified. There is I think a belief that somehow Boeing will get out of this, and Boeing was downgraded by Cowen, but Boeing, you had a terrible accident last night, and Boeing's down, barely down, $300 stock. So this again speaks to the idea that people want to be in. The most important thing that happened this morning, ex the Middle East, is that American Express got its long-awaited attempt to be able to be a actually freestanding company in China. I thought this could happen because PayPal got that, but the thaw in China, ex-GM sales, which may just be the GM of the wrong product. I don't know. Maybe the government's steering toward Chinese companies, but the thaw in China-American relations is happening right now. So you've got the thaw there, and you've got a chilling situation in the Mideast, where a lot of people feel, you know what, the Iranians had to take action. The Iranian action was initially viewed as being monumental, given they were ballistic missiles aimed at U.S. Air Force Base. And I was thinking, oh my, is this going to be Dien Bien Phu? Is this going to be Quezon? And by 10 o'clock, I said it's going to be just the way that, sadly, that various factions, Hezbollah against Israel, launches missiles, and it's for naught. And so I can't emphasize enough that the 2 markets, the market driven by China and strong employment, are far more important than the oil market, which is the way that people view what's happening in the Mideast. This would have been exactly the opposite 10 years ago, 20 years ago, 30 years ago.
I want to circle back and focus in on your Real Money column, which had a heavy focus on oil this morning.
Yeah.
Now, if you were just a retail investor, if you didn't have the Action Alerts portfolio, which I know owns BP and Schlumberger.
Yeah, which is just terrible. I mean, even I thought for sure, and talked with Jeff and Zev, I thought for sure this is where BP would get back to basis and Schlumberger would make look great after the upgrade in 35. It was Schlumberger's got a 5% yield, and BP's got 6%. People don't even care, even with treasuries at 1.8 in the 10-year. So there's nothing. I mean, there's when I was interviewing Mike Wirth yesterday from Chevron, I asked a question, was by no means meant to be disrespectful, but what are you going to do when oil is just a complete wasting asset story? Now, he talked about 30-year demand and not to worry. The market's saying be worried, and particularly for his stock, and he's a very good executive.
But I want to take a step back. Let's say you're an average Joe and you don't have this portfolio that you manage. What would you do with oil at this point?
Well, Ben Stoto and I were going back and forth. The Oxy's been up every day since for the last 3 weeks. If you wanted to speculate, you could do something like that. But it's become a very small part of the S&P, and therefore it can be ignored entirely. And I think that there's a new generation of money managers who care far more about ESG than anything else. Boeing's only down 6 now, crazy. And there's no way that an oil company, no matter what they do, is going to be able to offset what their product is, which is a product that's against, say, EV. Now, what's interesting, of course, is that they'll tell you, well, what's EV really run on? 30% of our country is generated, energy is generated by coal plants, but actually down to about 27. But I come back and say that you just don't need it. It's just too small. And I felt that we should be in, with 30 stocks, I felt we should be in some oil stocks, and that's proving to be an ill-advised position.
Earlier you mentioned Macy's and its better than expected November and December comps. Now, based on that, Jim, and based on what we talked about yesterday with Matthew Boss's call on retail, the JP Morgan analyst, I gotta ask, is Macy's a sign that you should get into retail now if you're an investor?
Well, it's a down and out retail. We had a downgrade by Oliver Chen on Kohl's, even though Matthew Boss from JP Morgan thought Kohl's would be better than expected. That's a battleground, unfortunately, that we're in Action Alerts. We did trim Kohl's at 51. I like retail very much, and that's why we own Burlington, which is great, and we own Home Depot. And Home Depot's good. It's down a lot. I saw Lowe's just picked up a very good chief merchandise officer. I wouldn't be surprised if you start seeing a turn in Bed Bath & Beyond, given the fact that Mark Tritton's there, who used to be in Target. I like Target very much. So retail, I think, is a great place to be, particularly with oil not going higher and with credit avail. And ADP, job growth is directly related to retail. So retail's a terrific place to be. Terrific. Hey, by the way, just financials are the big shocker here. I didn't expect the financials to have a rally, and the one in the Dow that's very interesting is Goldman. I think that we're not emphasizing the new transparency of Goldman yesterday when they changed things, and really you're going to get a very cool, very clear indicator of what they're doing in the consumer banking, which had been lumped in basically with wealthy banking. And I think you're going to be surprised and see it's far more consistent. That's a terrific story, and I think that that offsets the disastrous story of Walgreens, which is, please do not confuse Walgreens with CVS. Walgreens is actually doing terribly in the front and back of the store. CVS is doing well in the front and back of the store. I know CVS is down, as some wise guys are saying, well, it's got to be bad, but that's just untrue. The management of Walgreens, I'm beginning to think, is incompetent.
Now, I want to reiterate for anyone watching that Jim does have a live members-only call over on Action Alerts Plus at 11:30 a.m. this morning. You're going to want to watch it with all the geopolitical risks that we're seeing in this market. And
there's a lot that's going to be just going back and forth with Jeff, and I have to do that because the president speaks at 11, and that's going to change the narrative again while we're doing the conference call. So obviously a little more free association than I'd like. I got to come back to Boeing again. You have a downgrade by the best analyst on the street, Kai von Rumer at Cowen. You have a sad plane crash, a Boeing 737, not the MAX. You have Southwest Air downgrade Bank of America, Merrill, because it's not coming back anytime soon. You have the new simulation rules that is going to make it so everybody who's on the 737 MAX is going to have their pilots having to do retraining, basically. And the stock's barely down. You would think that It's barely down. Again, this is a market that astounds you, and it's absolutely true that January's been strong, as I mentioned, for the last 3 years, but it's incredible. I can't believe it. Just incredible. Excuse me.
All right, Jim, thank you so much for joining us
Absolutely.
today. Guys, thanks for watching. I'm Catherine Ross, and we'll see you tomorrow.